Chart watchers and Decision Point faithful, welcome to this Friday, March 1st, 2019 Decision Point show with your hosts, Carl and Aaron Swenlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, welcome back. And how's everything going out in Redlands? Dad, what are you thinking?
A little hectic today, but we're going to make it, I think.
Let's hope so. All right, well, what we're going to do today, we're going to look at the price relative for the major indexes with the S&P. We're going to do our monthly review. All of the monthly charts just went final yesterday, so we are going to be concentrating on looking at the monthly picture, the long-term picture. We'll look at our DP indicators as well, and then Carl will be covering the big four: dollar, gold, oil, and bonds. And then our bonus material today, we're going to look at the gold and the dollar's correlation or lack thereof. We're going to do a historical tour of the Mcclellan Summation Index. And we are going to also look at the big picture of the new highs, new lows. So let's go ahead and we'll just get this party started. Decision Point scoreboards. We did not have any signal changes this week. The latest signal changes that you'll notice on here would be the intermediate term or weekly PMOs on the S&P 100 we had a buy on the 22nd, as well as on the NASDAQ 100 on the 22nd, which caught them up to both the Dow and the S&P 500 that already had that. Now, the long-term trend model did give us a buy signal on the Dow, but we're not getting it on the other three. However, just inside, the SPY actually did get a long-term buy signal on the trend model 2 days ago. So these are the Decision Point sector scoreboard. Here you can see what's going on in all of the different sectors as far as our models go. Intermediate term trend model, remember those are 20, 50-day EMA crossovers. Buy signals are, of course, when the 20 crosses above the 50. And as you can see, all of our sectors right now have 20-day EMAs that are above their 50-day EMAs.
Aaron, the long-term trend model for technology clicked over today to a buy, and I didn't send you the file. So.
Oh, okay. Well, there you go. So you also are going to see not only did XLI, the industrials, give us a long-term trend model buy signal, we are also, as Carl just said, technology also came in with a long-term trend model buy signal. So really hard to think bear market, I would have to say, when you're starting to see all the long-term trend models starting to switch. But I don't think we're out of the woods just yet as far as the shorter term goes. All right, so here is my price relative chart, and I wanted to give you a look at where all of the major indexes pretty much are standing in comparison to the S&P, and just some observations that I've made. I did go over this chart on Market Watchers Live on Thursday morning, so you can always look at that as well. But one thing that I have noticed is that, of course, our mid cap and our smaller cap indexes are doing better than the S&P 500. They are rising, which is a good thing. We want the participation in the mid and small caps to continue if we want to see the market continue higher. But what we need to start seeing is for the large cap indexes. You've got the S&P 100, and even the NASDAQ 100 isn't really participating at all in this rally. It's been rather flat relatively to the S&P 500. And like I said, large caps just aren't doing the participation that we need them to do. You can see that when we were on our way down here, that we did see technology. It was rather flat. But they were still it was still holding up even on that decline as far as the technology stocks relative to the S&P 500 during that big decline.
Let me just clarify something there. When it's flat, that means it's basically matching the index that it's being measured against. So the S&P 500 was going up, and the NASDAQ was keeping up with it. It wasn't ahead or behind.
Right. I mean, it came in here, and then we did get that rise, but that's mainly due to the rally that we saw back here. So we've got these smaller caps, though, participating and doing better, but the large caps are still right now just not performing the way we want them. All right, so let's go look at some more charts. And I'm going to take us right on over here. And I'm going to go ahead and get started right away with the Dow chart right here. One of the things that I'm noticing on the daily charts for the scoreboard indexes, which again are the Dow, S&P 500, NASDAQ 100, and OEX, I've been noticing, of course, that we're getting these turning over PMOs right now. And I don't like to see that pullback that we're seeing right there. That's not a good sign. That usually is, the sign we're going to get a topping market. It's an overbought territory, which I don't care for as well. So that's really what I'm paying attention to right now on the Dow, but you're going to see that on all of the other scoreboard indexes. So we'll want to keep an eye on that. And there is that long-term trend model buy signal that came in. Let's go ahead. I'm just going to skip up to the monthly chart here for the Dow since all of these went final. Now, I didn't date my chart as of yesterday, so you are going to get the bar, at least on my charts right here, that is only the trading that has happened today. So just to give you a heads up on that. But the thing I'm noticing on all of the monthly charts really is the deceleration in that PMO on the monthly chart. And that is a good sign. We've seen some fake outs before where the PMO will decelerate and then it will continue back down. But I think that is a good sign that we likely wouldn't go down and test that December low. But if I start seeing that accelerate back downward, then of course it could be pretty ugly. All right, let us go to the NASDAQ 100. And here you can see we do have that bearish rising wedge, but this is why I don't like patterns that get overly mature, because then you get really close to the apex and there's really no choice but for a lot of times for price just sort of drift right on out. I don't think this is really that case. The main thing is we're not getting the kind of breakdown that you would expect out of a rising wedge like this. And here you go, you can see, especially in the thumbnail, that 50-day EMA just about ready to cross over the 200-day EMA. And that, like I said, would give you a long-term trend model buy signal. But we are still seeing these curving tops on all of the PMOs on the daily charts. We look at the monthly chart for the NASDAQ 100, same thing. You're starting to see some deceleration, but certainly not as much deceleration as we were seeing on the Dow's chart. All right, OEX. Again, looking about the same. We're still within that bearish rising wedge, although this wedge is starting to get a little bit too mature for my taste. You do have the PMO has turned back up here, even though we are getting that sort of curvature, that topping on the PMO in overbought territory. And monthly chart, like I said, is the main thing, is seeing the deceleration on these PMOs for the large cap indexes. And then let's look at all three for the daily, weekly, and monthly for the S&P 500. Actually, let me make this. There we go. Okay, so again, that curved topping action that's going on with the PMO, it's overbought. Particularly, we were saying for a bear market, although I have my doubts now that we're in, we're going to see the lows here in December necessarily. But I do think we're going to go down and test that 200-day EMA. And John Murphy.
That the daily PMO turned down yesterday and it turned back up today.
Right. We're getting all of that twitchiness, it makes these indicators a little tougher to read, but it makes sense. We did have that drop, but then today was a really nice rally. So this is the thing I'm watching. We've got all those rising bottoms on the OBV. We don't anymore as far as the last one was concerned. So that's something to consider as well. All right, weekly. And we do have that PMO buy signal still intact on the weekly chart. That's the main thing I would show you on all of these charts right now. And then as far as the monthly, there. Same thing, deceleration. And then like I've pointed out, we've only had about 20, 21 sell signals in over 90 years. That's why I've continued to be on the bear market side of things. I just don't trust the market when that PMO is, the monthly PMO is below its signal line. All right, let's see if our indicators have woke up yet. Yes, they have. All right. The main thing I want to point out on the climactic indicator chart, this is, of course, got our breadth, new highs, new lows, advanced decline line, or advanced declines. The main thing I want to point out is that the VIX has actually, let's see, it closed just above the upper Bollinger Band, which at this point is 1354. Now, remember, we do invert our volatility index, especially on the very short-term charts, because it's a sentiment indicator, really. And in the very short term, when you see people getting extremely complacent, that's when things can get rocky. And we can see actually, Dad, it looks like the advanced declines and the advanced decline volume gave us a little bit more of a climactic reading than we've seen in a while as well.
Right.
So expectation, I'm looking for a decline at the beginning of next week. All right, short-term indicators, and both Carl and I have written about this quite a bit in the DecisionPoint blog, so I won't go too far into it, but we've been seeing divergences, and typically these divergences, so we're finding out, tell us to go and take a closer look at what's going on. I don't think we're out of the woods from this divergence just yet. And finally, I'm going to do the intermediate term indicators, and I'm going to pass it back to you, Dad. All right, the big problem is these negative crossovers in overbought territory, very overbought territory. I think we're looking at readings we haven't seen since back there in 2014, very overbought. So this is certainly not good news for the intermediate term. And of course, you can see the PMO in relation to those indicators, not good news. All right, I'm going to pass it back to you, and we will do the big four.
Okay, the dollar was strong today, and it kicked gold in the head.
Yeah.
But the notice that the daily PMO turned up, and we're still locked in a rising wedge formation, and would ultimately expect that to resolve downward. For the weekly. The rising wedge I've drawn here is different. The top is drawn across different tops, and but it's still a wedge, and still expecting it to resolve downward. The weekly PMO turned down this week, and so below the signal line, so that's negative. When I look at the monthly charts, I switch to the actual dollar index chart, and I can't make out what's going on with the monthly PMO on that. I think it's still rising, and it's still above the
yes.
signal line.
Yes.
It's not particularly negative, or positive. I don't have any. The hair's not standing up on the back of my neck for any reason here, but I'd say it's positive in this time frame at this point.
And next up,
gold. What a day we had, huh? So it was doing really nicely, staying above the rising bottoms line, and today it just really fell off the cliff, and the PMO is falling below the signal line, and it's basically lower than any point since December. So we do have support right at 1300, where yeah, right there. I would have put a line in, but I didn't have the numbers until after the market closed. And so it's possible it could bounce off that support. Let's look at the weekly.
always, yeah. There you go.
See, breaking down from the rising trend. And the weekly is PMO is still rising. So, yeah, that's, it looks like it's trying to top there.
Yeah.
Notice the trading range going all the way back into 2014. And we're still above. We can have some bad days, but we're still above the 2018 low, and we'll see. I put a dollar index in chart on the bottom just so I could maybe scope out the correlation on this. And the thing with the correlation index is that if it's positively correlated, it could mean they're both going up together or they're both going down together. So it tells you what they're together, but it doesn't really, it's beyond my capabilities to. So I'm not sure how much this dollar index panel is going to do for us. This is the monthly.
Okay. Yeah, basically when it hits that zero line on the correlation, they're completely not correlated.
Right.
That's pretty much the main thing.
But being correlated doesn't tell me. It just tells me that, okay, they're moving.
Oh, right. It doesn't tell you if they're rising or falling. True.
No, it doesn't tell you that. Right. It's same with relative strength. Relative strength line could be rising, but both of the indexes are going down. So here we have gold. See that trading range since 2014. And this is as of 28 February. So I'm not sure how it's going to look like after today, but the monthly PMO is above the signal line, and it's locked into that. And anything that happens between now and the end of March won't really count.
Right.
It could change, but it's going to be above the signal line no matter where it goes after that.
Okay. USO.
Okay, we had a nice reverse head and shoulders pattern, and last week, and it had broken above the neckline. And this week, it's chopping around the neckline. So I call your attention to the horizontal line of support. Going back, and you notice that it has managed to stay above that line. So I'm not.
Yeah.
I don't know what it's going to do. I hate head and shoulders patterns, by the way. They just suck you into talking about them, and then they disappoint.
Yeah. I think Bulkowski did a thing on them, and they're really not as they tend to not execute as much as you might think.
Right. Okay. We have a weekly chart here. And notice USO is in a range. Well, let's just look at the WTIC. It's in a range between about 42 and 7x right now, and heading towards the top of the range, we guessed. Right now, it's the PMO is above the signal line, and I'm not sure just how much leeway we need to give this, oil. I because of the huge amount of supply is available, and I'm just not sure how much, how much higher that they're going to actually get. But I'd say I'll give it 76 would be my maximum upside for now.
All righty. And the monthly for oil.
Right. This is a series of lower tops. And again, we see the trading range. The PMO, monthly PMO, looks like it flattened out this month, and it's below the signal line, but it could be turned up again. I'm not getting much help out of this. It just helps, sometimes a monthly chart, all it will do is orient you, and that's about it.
Yeah. All right, let's move on to bonds, and then we'll hit bonus material.
Yeah, look at that.
Oh, Adam and Eve.
Right, Adam and Eve top, double top, and they penetrated the confirmation line today, and PMO is falling below its signal line. So
Yeah.
I think maybe that the rally that came from the Feds shifting their stance is probably over. Let's take a look at the weekly.
Mm-hmm.
Notice that the rally did not take TLT up to the top of the trading range, the 2-year trading range. And now it's broken down. So the weekly PMO has topped. So I'll be expecting a retest here in maybe a couple of weeks on that support.
All righty. Monthly.
Okay, now I switched to USB, the 30-year Treasury bond. Again, we can see where it rallied off the rising trend line, and I think it's going to be headed back down and test that line again. The monthly PMO is rising, but you can see that it is trying to roll over.
Yeah, a lot of hesitation.
Probably do so if we get some more pressure on that rising trend line.
All righty. Okay, guys, bonus material. First, the gold and dollar correlation. We talked about it a little bit, but
right. I had a comment posted on my article last week, and the person said that he thought that the gold and the dollar were always going in an opposite direction, and that's where that correlation chart helps. But you notice primarily everything below the line means they're negatively correlated. You notice that most of the activity is below the zero line, but it's amazing how it's almost cyclical how it pops up above the zero line, and so it sometimes is correlated and sometimes it's not.
Right.
And that's the thing that to be aware of.
Well, and also if you increase your the range, the
yeah, from 20 to 40. Or,
yeah, you'll see it's the same thing though. It's the same thing.
Right.
Okay.
Okay. Mcclellan Oscillator. Let's take a quick course in Mcclellan Oscillator, which is really an ingenious indicator and came out way before any of this kind of stuff was out there. But essentially, the Mcclellan Oscillator, you calculate the 19 and 39 EMA of the daily advanced decline ratio, and this is the ratio version of the indicator. It's not the original version. But, so you calculate those two EMAs, and then the difference, you subtract the slow one from the fast one, and that's what you get the Mcclellan Oscillator. Going up to the Mcclellan Oscillator part of the panel. Mm-hmm. There you go. Now on that chart, that's showing you when these the zero line is where the 19 and 39 cross. So whenever the oscillator is above the zero line, it means that the fast EMA is above the slow one.
Yep.
Now, what's really cool is the way they came up with the summation index, and they add the daily Mcclellan Oscillator reading and get the summation index. And it gives you a much steadier picture of what's going on with breadth. Yesterday it topped, and again it's started rising again. But I think we're coming to the end of that rise. But go ahead and switch the new one, the next one. I just want this really emphasizes the size of that move. It's just really humongous. And you'll notice that at similarly height on this summation index, you can see what happens to price after the index tops.
Yep. And generally, it's not good.
No, it's generally not good. The next one is a long-term look at this. And what I just went back to see what is the last time we saw a move like this. And that was back in 2003 when the market was coming off of that 2002 bear market bottom. And you can see at the top of that peak, we didn't get a pullback. After that, it moved sideways for, I'd say, several weeks, and then it resumed its climb. So we could possibly see something like that happening when the next time the summation index tops. We could get some sideways consolidation for a number of weeks on the S&P.
Yep, that would be best case.
That would be best case, and then possible if you study the history on that. Mm-hmm. Okay, I just wanted to take a look. Nothing particularly special here, but you notice that back in the left side of the chart, we've got a number of spikes that really prove to be they're climactic, but they're not indicating any kind of a price blow-off. We have finally in 18, we have a very high spike on the new highs. And you notice that there's a negative divergence against the high in the end of January. Now, here we have all this positive activity recently, and we're still not getting anything close to what we were seeing back there in 17 and 18.
Not at all.
Okay. So I think we could consider the current levels as being somewhat climactic. But it's also interesting that you didn't get any higher spikes as the market was heading into its all-time high in September, October. Mm-hmm. Still, the new highs were quite a bit less than what we saw at the beginning of 2018.
Excellent. Well, I think we actually got through all the bonus material and all of the other charts. So I would just finish with, what are you going into next week? Are you a bear? Are you a bull for next week?
That's one of the things the way this show is timed, I don't have a chance to look at the final indicators and charts and actually let it cogitate and
well, I'll put you on the spot next week.
Okay, what were you going to say?
So, yeah, I want to thank everybody for being with us today. Remember to complete the survey when you leave. It's just under that the box you'll see right there that you're watching us on. And as a quick reminder, DecisionPoint airs on Fridays at 4:30 p.m. Eastern. Have a great weekend, everyone, and we'll see you back here next Friday. Happy trading.